Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for July 27th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to hold in this range. This is a range we've built out here over the last 2.5+ weeks, and today we have FOMC and the Fed funds rate decision later on this afternoon, 1 p.m. Central. So we have that to look forward to. Early on today, we could see a little bit of trading range activity, but expect prices to coil up heading into that 1 p.m. report. Once that 1 p.m. report comes out, we should see an impulse move arise out of that report, and from there we'll be able to play based off of those key levels heading into the rest of the session and heading into the rest of the week. So right now, basically everything's coiling up ahead of this report. Once we see a little bit of jiggle outside of this range, we could see the next key move. As of right now, we just got to wait and see how it goes. Obviously, anything toward the upper end of this range, so if we take a look at the intraday time frame here, anything up here in the 2168s up to 2170 is still overvalued within the current range. So right now, what we were looking for yesterday was for price to go into the 68s, 2168s, and from there to fade it back down. If price got into the 54s, we were looking to fading back up. And right now, it's much the same. Prices have held near 2168 in overnight trading, and these bulls here, if they're not getting paid, they may look to dump their trades, and this could end up leading to another return back toward 2161 and perhaps even back toward the bottom of the range between 54 and 56. If we do see another rotation into the zone, it could be a great opportunity to fade it back up. All right, let's take a look here at crude oil. Here's crude oil. This is a daily time frame here. One thing we talked about with crude oil was once we started to see price push down below our key support here, the implication was that we would reach 43.03, followed by a move into 42 evens. And so far, we've continued that path on the way down. The previous session came very close to reaching that 42 level, getting down into 42.36. We now have an inside day developing here after overnight trade, and one thing that's happening is the previous lows here at 43 are becoming resistance short term. Again, as I mentioned, we're likely going to see further downside price discovery toward 42s. We may see some sort of a short-term bounce off of 42s, but any bounce is likely to be a selling opportunity for another round of weakness, perhaps as low as 35. The reason I mentioned 35 is if you look at a higher time frame chart here, something we've been talking about in our trading room is the fact that prices here above value, that's VAH, have been offered and defended, and then price returned to value, price chopped around value, and recently took it offered. Both of those would imply that price would likely continue to the bottom of value, that's 37.06. And then from there, you have the LVN below, which is basically 35 evens. That's probably the next spot where you're going to see a significant bounce opportunity. So we could be looking at more weakness ahead. While 42s may provide a short-term bounce, any bounce could be a selling opportunity for perhaps a swing push into 35s in the weeks ahead. So this could be very significant as we head into August. Looking at the intraday time frame for crude oil right here, let's take a look. What you'll see again, trading range activity, a lot of back and forth here, basically between these two edges here. That's a nice impulse range right there, and we have the midpoint of that range where price is just chopping around. As a matter of fact, if we take a look at this with our fib extensions, so show these drawings, here's the impulse range that we drew yesterday in our trading room. So the high here, 43.39, the low is 42.36. The midpoint of this range is 42.87. Right now we have a neutral key range where price is trading in the middle distribution of this range. If we do see a breakout from this range, look to play to the expansion targets that are outside of the range. For example, 41.84 could be the next major drop down should 42.36 occur. And of course, the 100% expansion target would be 41.33. All right, let's take a look now at gold futures. Here's a look at gold. Let's bring this up into a daily time frame. Here we are. One thing we've been talking about is the fact that prices have been pulling back, and what we've been looking for is 1306 to 1310. Again, I always sound like a broken record because I pound these concepts over and over. This is a significant LVN in the charts, and this is an area where bulls really want to keep it bid for a shot at bringing this thing back up toward the top of the recent price distribution. Any failure to hold above this LVN opens up a quick return back to composite value at 1243.40, followed by a move to the opposite end of the range at 1208.30. So this is a significant pivot in the charts, and bulls want to keep it bid, and we're seeing a little bit of a bounce here. But in order to really extend this thing to the upside, you got to start getting back above 1340. All right, let's take a look now at the NQ. Here's a look at the NQ. As I've mentioned before, the NQ has been quite a bit more bullish than its counterpart, the ES, and some of the others, and has continued to push higher above that 45.50. I mentioned before that price may not see any rejection until we see the upper end of the recent range at 47.30. So if we roll this thing back out a little bit, you can see that last October, November, saw some resistance here at 47.30. That's a very, very important zone there. So price could and should likely push into that zone. Once you do, you see that there's been some rejection up here before. That could be an area where finally price returns back toward 45.50. What I've mentioned before is we're looking for rejections on highs. And until we see a rejection, you're going to see a continued upward price discovery phase. So it's still kind of a buy the dips type of thing as this thing continues higher toward 47.30. But once we see that rejection, perhaps a rejection tail or some sort of significant sell-off, that could be an early indication that we're headed back toward recent support. But until then, look for continued upward price discovery. Let's take a look lastly at the intraday time frame for the NQ here. This has been an upward push. One thing we see right now is that prices are holding above 46.85s. So that's a short-term LVN right there. Any pullback into that zone could be a buying opportunity for continuation higher. Failure to hold above that LVN and the recent highs here could open up a return back to 5-day value at 46.53. So again, any pullback into the LVN here could be a buying opportunity for another rotation higher. And again, prices could begin to coil up as we head into the FOMC later on. So keep in mind that while we could see early volatility, things could tighten up as we head into the 1 p.m. report. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.